Alright, so good morning, ladies and gents. Welcome back to this lovely. Let me just put that one a little bit down there. Okay, so yes, now you guys can hear me properly. I also want to put my camera on for you guys as well, a little bit. Okay, ladies and gents, let's quickly jump to this. First of all, good morning, welcome to this lovely Thursday morning for everyone. My name is Winston, good to see you, aka Mr. Mayor Forex Trading. Please share this video, so please share this live content. I trade live every morning, Monday to Fridays at 8 a.m. South African time. Okay, so the first thing I want to talk to you guys about is just trade I was in with a gold. We don't have a lot of time left because at 8 o'clock this morning we've got the GDP of the pound, and I do have a pound trade in. So let's work on this first before we get to the gold. I just want to work on this pound USD. Alright, so I trade on the 6-hour time frame. There's a couple of methods that I use when I trade, and I've been trading for a couple of years now. So yeah, and I trade live, and yeah, so the reason I'm trading on a demo account is, number one, to encourage new traders to start on a demo account. So many traders start trading, they put money into their real account and they start trading and they think they know the game, it looks easy. They lose all their money and they lose hope and they lose faith, and then, you know, they turn around and say, yeah, trading is a sham and a scam. But I'll do my speech now in a couple of minutes. Let's just get to this pound USD quickly. I just want to show you guys, we've got the pound, the GDP month on month coming out now in 2 minutes and 51 seconds. I just want to see what these numbers are on the pound. There's a lot of numbers coming out here all at the same time. Is the index of service, goods trade balance, construction output, prelim of the GDP, and then of course the GDP month on month, which will absolutely have a effect on my pound trade that I have in at the moment. So I just want to minimize this, just put it there. Okay, so at the moment I'm in the positive with the pound. I have moved my stop loss up into profit, so at the moment I am in profit. Doesn't matter what happens, even though it comes down and hits, I am in profit. So with a pound GU, with a pound USD. So I just want to see what these numbers are. If we get a bigger growth, if we get a positive outcome here, positive more than forecasted, then that will be good for my pound trade. That means we should see some upward momentum on the pound already. Really, there's some strong movement on the pound. We're getting quite big on the pound, but it's because the US dollar is struggling. The US dollar it's not that it's struggling per se. It's a very confusing time for the US dollar. I'll explain that also in this video for you guys as well, as long as going through the gold and the other trades that I'm looking at taking, and then my trading style, and then I will give my speech that I always give on my videos, and hopefully it resonates with people, especially new traders. I want to focus on new traders, people that are new trading. I want you to get into the trading journey and start trading the right way. Do things the right way, and you will be a profitable trader if you do things the right way. Alright, so let's just watch 50 seconds left, and then we'll definitely get to that, to the rest of the trading. I just want to see what the numbers are. 40 seconds. And yes, I am a vapor. I live on the coast. We're in winter, but it's hot. It's hot as hell. I'm wearing short shirts. That's the nice thing about South Africa, is even in winter, because we are in winter at the moment, it is it's hot, especially down here in Durban, KZN, where I live. Yeah. All right. Let's see. 10 seconds left. So let's see, I'm just interested in this GDP month on month. Okay, still the same, so nothing. I just want to see the goods trade balance. Okay, prelim, quarter on quarter, all remains the same, no change. Okay, so we've got the construction output that is a bit higher. That's good. That's good. That will give it a little bit of a boost, 0.5% higher. Okay, well, it's 0.2% higher than expected. Index of service. Okay, that's 0.1% lower. Industrial production. Okay, so construction and industrial. So you can see in the industrial, the construction industry in the UK. Things have gone better. Just give me 2 seconds and I'll be back. Right, so I am back. Right, so let's have a look. Let's have a chat quickly about these numbers. So the trading is a little bit on the downside. The goods trade balance is a bit on the downside. Okay, we've got the industrial production, manufacturing production. Okay, so if you look at the industrial industry, it looks like things have been going good. Things have been going good. The GDP growth hasn't changed, so we shouldn't see a big push to the upside or to the downside coming from the pound or affecting the strength of the pound per se. Especially now where we see industrial is doing good, construction is doing good, so which means new buildings, renovations, which means the infrastructure of the country is being upgraded. So which is good, which means investment, especially foreign investment in the country. So which is a good thing when you see construction and industrial production and manufacturing production. When you see things like that, then you know it is good for the country, but not necessarily to say that it will push the balance or the currency to a higher level. Okay, so let's just look also today at 2:30. We've got the core retail sales for the US dollar also coming up. So I will be live around about 10 past 2, 2:15. I'll be live again, so you guys can also have a look at that, look at those numbers and see what they are when they come out. We've got a French bank holiday today as well. The Chinese yuan. I know the Chinese yuan also had a couple of things in this morning. Also their production a bit lower. Retail sales. Chinese yuan. And on the higher side, fixed asset investment. A bit on the lower side. Okay, they've got their press conference. Alright, so unemployment rate in the China is okay, a bit higher, which is bad. But not too bad, you know, it's just by a 0.2%. Yeah, by a 0.1%. Higher than expected. Okay, so it's 0.2% higher than the previous. So this shows you that the unemployment rate in the country is steadily climbing, but you know that unemployment rate of 5.2%. You know, if I look at South Africa's unemployment rate, it is horrific. We sit with almost a 50% unemployment rate in South Africa. It is bad. So considering it's not too bad. It's not too bad. 5% unemployment rate is definitely not too bad. Anyways, let's get to the trading. Let's get to the charts. Alright, so you will see not a significant amount of movement. It didn't do much on there, but according to my trading style, this is cool. Once I see working on the pound USD, according to my trading style, once I see price break this previous high, this is a previous high because there was a previous high. The previous high got broken. So once price breaks a previous high, that is no longer the latest high. That is the latest high over there. So according to my trading style, once a previous high is broken like that, that one broke the previous high, which is that high over there. The reason this is a previous high is because that high over there, you can't say that is a previous high because that high, the low didn't break the previous low. Only if the low is broken, then that is considered the previous high. Alright, so just to let you guys know how I trade, I'll go over that trading style, but I think I've got a video on here also explaining exactly, or I'm thinking, I made a video yesterday or the day before yesterday, I'm still posted, explaining this style that I use of trading by break of structure and a follow through to explain how I do my trade. So this one I jumped in earlier because there's a couple of things I use when I trade. Now this you pick up of years of trading. You start picking up on patterns, well not patterns per se, but you start seeing things in the market which you will only see once you've been trading for a couple of years. You will start seeing things and reacting to things. There's no logical reason, or there's no anything to give me confidence about that why I jumped in there. I jumped in there on this trade. The reason being, there is a market gap. There's a fair value gap, or they call it the fair value gap. I just call it the gap. I don't use trading terms when I do my trades. I try and keep it, to simple terms, because I cater for new traders, people that just got into trading, and that are looking for some advice or some mentorship. That's why my channel is focused mostly on people starting out to trade. And the reason I trade live is because there is a lot of videos out there of so-called traders that post videos of their winning trades, but you will not see them trade live. You will not see them trade live. Reason being is because they are manipulating you and fooling you and tricking you into thinking that you can become a millionaire overnight, a sensation. All you have to do is buy their books, buy their courses, join their telegrams, and join their Patreons and all that cuck. They're just there to show a visage of winning trades and making you believe that they are the best traders. And believing me, if you join the Discord groups or the Telegram groups, you are going to lose money. Trading is systematic wealth building. It's little bit by little bit by little bit. A little bit makes a lot. These people, and be careful for them, a lot of them are online that want to post these winning trades, but they will never post their losing trades. Never. They will never post their losing trades. And you will never see them trade live. Why? Because they're only there to fool you. They don't know two shits about fucking trading. They don't know two shits about fucking trading, and it irritates me. That's the reason why I started this YouTube channel in the first place, to try and save people from these actors that are just there to take your money and ruin your life and ruin your trading career. Why do you think people trade? Why do you think they are people? They are real traders, and they are real traders online that trade live. I can mention one of them, Trader Nick. Go and join his YouTube channel as well. He's one of the guys that I also like to see every now and then, just to get a refresher, just to pair up. Now, he trades live. Yes, he does post videos as well, but he also trades live. And that's what I like about it. That's why I also trade live. Here it is, live for everyone to see. So if you like what you see, if you like this YouTube channel, please like, subscribe, and share. And comment down below if there is something you want me to have a look at when it comes to markets, to forex, the stock market, gold, oil, copper, silver. Doesn't matter what you want me to have a look at. If it's on the market, I'll have a look at it. I'll do my research, and I'll show it to you live. I will look at that you ask me. I will look at it live for you, and then give you my opinion on it. Remember, all this is just my opinion and my style of trading, my way of trading. When you do trade, don't go and risk more than 1% of your account. Don't go and do that. Try and risk only 1%, if you can, less than 1% of your account. Risk. So that means if the trade doesn't go in your favor, doesn't go your way, you only lose 0.5% of your trading account. Oh, it's a Thursday morning and people are really starting to bug me here now. Okay, done. Anyways, let's continue on. I'm not going to preach the whole day. I will put out a video of my trading style, what I look for, and how I trade. But if you follow me every morning at 8 o'clock, you will see exactly how I trade. You will pick up on my trading style and pick up on what I look at. And I will show you things that I wish people showed me when I started trading. Because believe you me, I made so many mistakes. So many mistakes. I blew my account so many times that yeah. It is rough. It's rough out there because I also followed the wrong people. That's why I started my YouTube channel. I went off watching videos from YouTube to trade, and I traded for these last couple of years on my own. Now, I didn't check any videos. I didn't take anyone's advice. I just traded on my own and just did my own thing. And also another reason why I trade on a demo account is to inspire you as a new trader to start trading on a demo account first. A lot of new traders, they open a demo account and they trade for a month and they think, oh, they got it. No, you ain't got it, my bro. You fucking ain't got it. You ain't got it. Spend time on your demo account. If you can be a profitable trader for at least 6 months, show profit for at least 6 months, consistently show profit for 6 months, then and only then, in my opinion, consider trading on a real account. Reason being, when you trade with your own hard-earned cash, with your own money, it's different. It's different. There's emotions involved, there's feelings involved, there's fear involved. The fear factor is just out of the roof. But if you've been trading on a demo account for, let's say, a year, and you are consistent when it comes to profit, when you know you are consistent in the style you trade or the way you trade, you will have so much more confidence when you trade on your real account that the fear factor will be much lower because you are more confident in your trading. Alright? And also, if you use small lots and only risk small amounts, like not even 1% of your account, you can open your stop losses. You can widen your stop losses, because that is where a lot of people lose money, by having tight stop losses. And the reason they have tight stop losses is very simple. They're trading too much. They're risking too much. That's why they don't want to widen their stop loss, because what if I lose this big amount of money on my account? What am I? No, don't put yourself in that position. Avoid that position. Trade small lots. Then you can widen your stop losses. My stop losses are wide, and I'm telling you, it is wide, far away. But I can trade that way because I use small lots. I don't have to fear if my stop loss does get hit, because yes, it happens. It happens to everyone. But at least it's not that like, oh shit, there goes $1,000, there goes $2,000, there goes, and you sit and you worry, and then your next trade that you take, after something like that happens, your next trade you take, I can promise you, is also going to be a losing trade, because you're going to put a very tighter stop now, because shit, you're losing money. Don't put yourself in that position. If you want to do that, go to a casino. You'll have more luck there, because then you're not trading, then you're gambling. There's a difference between trading and gambling. But anyways, all right. So let's get to this. That's enough of me preaching. Let's get to this. All right. So I don't see a significant push or pull on the pound, but hopefully it continues with its strength. And once price action breaks above this recent swing high, I will definitely move my take profit up to that recent swing low. But that is only a swing low once price action breaks above that previous high. Then that is considered a swing low. Okay, a lot of people, I want to show you that as well. How do you identify what a swing high is and a swing low is? Where is the swing highs? Where is the swing lows? Quite simple. I can just explain it to you on this chart that's right in front of me here. Okay, so basically what you're looking at here is sideways movement. Okay, so on this, where would you see a swing high or a swing low? Now I see here is a low, there's a high. So price action broke that high, which means once it breaks that previous high, this is confirmed your swing low. Now there you go, price action is there, it goes down, but doesn't break this previous swing low. So this is not the latest swing low. It's not, because it didn't break that swing low, which means we are basically moving towards the upside. We're moving towards a buy. So now you know you're gonna have to look for buys. If this price broke below that one there, then that would have been your swing high and you would have formed a new swing low. But now that's your swing low, that's your swing high. Price didn't break the previous swing low, so that means we must look for where price breaks. Price breaks to the upside, so that's the high there. We're waiting for price to either break that high or break that low. That will give you your swing high or your swing low. So here, this is not a swing low yet. Went to the upside. This one broke that high over there. So which means this here is the recent swing low, because that is the one that broke that high. So this means this is your recent swing low and that is your recent swing high if it breaks further. So there's your swing high, that's your new swing high, that's your recent swing low. Now price goes, doesn't break the swing high, goes down, doesn't break the swing low. So this is still your previous swing low and your previous swing high. There it doesn't, okay, yes, there it broke that, it did break that one over there. I just want to see quickly. Yes, it did form a new low over there. So it did break that previous swing low, which means this is your new swing low now, and this is still your recent swing high over there. Now price broke through this swing high, which makes this your new swing high and that your new swing low. There we go, price goes up, price goes down, breaks the swing low, so which means this, wherever this one ends, will be your new swing low, and that is still your swing high. Price comes up, doesn't break the swing high, so this is not your swing high unless price breaks the swing low over there. So price comes up, goes down, breaks your swing low. So now you know you in here already by your price being broken here, by your swing low being broken, you know that you are in a downtrend. You are busy going down. So what I usually do when I do see a break of structure like this, I just want to show you guys. Usually when I see a break of structure, okay, their price came and broke the structure, one shot, came back for a retest and did a second run. There's your second run right over there. So that is your second run. Once I see a second run, but it doesn't break the previous, it doesn't form a new swing low, then I do not enter any trades. It has to break the swing high or the swing low that you're working at. So I will not enter this trade here because there's not a new lower low. And thank goodness that I didn't enter this trade yet. Now there it goes. I'm waiting for price to break the C. Price came right back into this zone over here. There price breaks that previous swing low. Remember, this is still your previous swing low. Price broke that swing low over there. Did a retest, did a second run. Once a second run comes in, there's a second run over there. I put a sell order on the level of my previous swing low. So which means it is, so I've seen their price broke the previous swing low, which is that one there. This is not a confirmed swing low. Price broke that previous swing low, came all the way down, did a broke through, did a retest. Basically this is a green candle and a second run to the downside. So this confirms to me that okay, we are looking for a sell. So what I do, once that happens, I see a second run, I already put a pre-order, a sell order in on this previous swing lows low over there, right at the tippity top bottom of it. I put a sell order. So price is still here, price comes up, puts me in the market. Where do I put my stop loss? Oops, my goodness, I usually put my stop loss. So remember, I entered the trade here on the green line. I put my trade there, so it picked me up here. I usually put my stop loss above that previous swing high over there, because it is a swing high, because it broke that swing low. So that confirms that that is my recent swing high over there. So that's where I put my stop loss. Now I'm waiting for price to form a new low. There we go. Dip. That one broke that low, so that is the new low. Once I see it breaks it, then I move my stop loss to that swing high, because that confirms that is the new swing high. Now I'm at break even. I'm at break even, so I'm not losing any money. I'm at break even here. Price comes up, dip, takes me out of the market. So I didn't make any money on this trade, but also I didn't lose any money on this trade. Be very careful. I don't lose any money on this trade. I didn't. So now I'm waiting, because that is now my recent swing high. Now I know, I'm going to put the green line there. So now I know that there is a tippy top. That there is my recent swing high. That is a high. I'm looking for something to break that high or break this low over here to tell me what direction to take. If price action broke that swing low, I would have worked it the same way as I'm going to work now with the swing high. So now I see price goes up, breaks my recent swing high. So now I'm looking for buying opportunities. How does my rules work on my trading strategy? Quite simple and easy. I see a push to the upside. My previous high is broken. So this is a breaking candle. What am I waiting for? I'm waiting for a bit of a reverse and a second run. So there I get a reverse, and there I get a second run that breaks that high. This second run here, if it didn't break the high, I wouldn't have put my trade in. Wouldn't have. I'm waiting for a second run or a run to break that previous high over there, to break this high, because that is my previous high. There, I see that high gets broken there. So now I'm feeling confident to put in my buy order. Right at the tippity top of that wick over there, while price is there, I see, all right, price broke that swing high. So now I know, okay, price is there. I already put my pre-order in. My buy order is in already at the tippity top of that one. Price goes up, price comes back in, picks me up, puts me in the market. And look what happens. Zoop, shot to the upside. So, which means this is not my new swing high. That there is confirmed my new swing high. Comes back down, breaks the high, so which means this is my recent swing low, because this low's high broke the previous high. So that is my new swing low. If this price action didn't break, that high over there and came back down, your swing low would still be that one over there, and that is not confirmed a swing low. So you can't work off that one. That's just a glitch in the system. All right, but because that from that low price came back up and broke the previous high, that is to me a confirmed swing low right over there. Price goes up, comes back down, price goes up, breaks that previous swing high. So which means this is now your recent swing low. So you move your stop loss, your take profit all the way up to there, and you wait there. So this is where your swing low is. You put your stop loss there. Now it's your take profit. Price comes, takes you out the market, because remember, there is your previous swing low. Let me just make this one a bit longer, and I'm going to move this one out the way so I can explain it properly to you guys. First, let's just make this one straight. So which means that is your new swing low, and there's your high. If price came back down and formed a new high, you would have just did the same process. But price didn't. Price came back down, took you out the market there, took you out the market, one shot, you out the market. So, but now we also know that what is your next move? Now you're looking for a selling opportunity. So price came down, bounced back up from that level, broke through. There's your break candle right over there. There's your break. Did the retest. There's your retest. And there is your second, but I'm waiting for that, because that was now the recent swing low. I'm waiting for that low to be broken to see where the high is, to see if I'm going to put in the trade or not. And that candle broke that initial breakthrough candle. Let me explain it to you properly. That break candle, that low there, that's the breaking low. So you want a second run to break that low over there. Then only is it confirmed that price is going to go down. So once I see this candle here break that previous low over there, then only I put my trade in, a pre-order, right at the bottom of the recent swing low, which is there before the new low was formed. that one there. So I put a pre-order in there. So while price is still there, down there, busy jamming around, price comes up, boop, puts me in the market, and there we go. Now we're in profit. So now I'm waiting for that low to be broken, to be confirmed that that is a low or that is a swing high. That low is broken, which means now we're busy going down. Their price comes up, forms a high. I need to be sure that this is a swing high. How do I be sure? If that low is broken. There, the low is broken, so which means this is my new swing high. So I move my stop loss or my take profit, because remember, I jumped into the market right over there on the red line. I did put my sell order in there. I got picked up. So this is my new swing high. So I move my take profit from there. Here I would have had my stop loss. I would have just had my stop loss right above there. I usually put my stop losses very wide. So, and once I start seeing I'm in the right direction, I take my stop loss and I do a trailing stop. So this is now confirmed to be my new swing high because it broke through that recent low. Now I'm waiting for the price to break that low there so I can pull down to the next swing high. Price bounces around, comes down, zip, there that low is broken, so which means this is now my new swing high because that price is broken. Price goes down, price goes up, alright, price goes down, doesn't break that low over there, still doesn't break that low. Tip, here is the candle that broke the low over there. That is your low, your recent low. So this candle over here broke through there. So what is that? That means that one over there, where this little red is, this is now your new. I'm just going to take this one away because this is now, because that's where I put this one. This is now your new swing high, your recent swing high, because price broke the recent swing low, which means here you have now your new swing low. So you need price to come up and break that low. The price comes up but doesn't break that low, so which means that is still your recent swing high. That is not your recent swing high over there because that price didn't break through the previous low. Didn't break through, so that is not a high. That's where a lot of people get confused and get caught in a situation where you don't want to be in because they don't know how to identify a swing high or a swing low. You have to know it's only a swing high when it's only confirmed a swing high when the price breaks through the previous swing low. Then it is a swing high. Only then. If price doesn't break through your previous swing low, like it comes up, goes back down, comes back up, goes back down, but does not break that recent swing low, then this is not a swing high. This is not. This is sideways momentum. You don't want to be in it. That's sideways movement, sideways market, consolidation. You don't want to be in that. So that's still your previous high, and this is where your stop loss is in anyways. Your take profit is there. So now price comes back up, boom, takes you out the market, right over there, took you out the market, and now you're waiting. You see that is the breakthrough candle over there. So what you're waiting for, let me just make this one again. I'm going to use it now again. So now what you're going to be waiting for is for this high over here to be broken. You want this high because that is the breakthrough high. You want this high to be broken. Once this candle breaks through this high over here and comes back for a retest, you want to put your buy order in. So that's what we're waiting for. It broke through there, nice, came back for a retest, but it hasn't broken through yet per se out of that breakthrough candle, because that's where you'll put your buy order in at the very tippity top of that breakthrough candle. And price should come back, pick you up, and go further. I jumped in earlier onto this market. I mean, where did I jump in? I jumped in here. That's a stop loss over there. This is a pound USD. Yeah, pound USD. Yes, I am in this market. Where? Oh, I jumped in here on this green. So I can't see my. There it is. There's a green line. Okay, I don't know why I have that there. That could actually just be gone. But anyways, I just put it there as a guide. All right, so I jumped in earlier onto this market. Reason being because of there's another thing that I look for when I trade, and that is I look for these. You can't see it now because my face is in the way there. But there's these gaps. I just want to take my face away for 2 seconds so you guys can see that over there. Let me just pull that away quickly. Because I look for these fair value gaps over here. Sorry, I couldn't see it now because my face was in the way, but okay, I got my face out the way so you guys can see it now. So I'm looking at 2 screens here at the same time, and then I'm looking at my phone at the same time to see what the video is like performing live on YouTube. Alright, so this here is called a fair value gap. That, when you see a gap like that, it means big institutional traders jumped into the market. You really want to pay attention when you are trading. You really want to look at these gaps. If you see a gap like that, you must know. If it's a red gap, then you know a lot of sellers have jumped in. Then you know that is a good and a solid not support but resistance. If you see a green, this is a green candle, so this is a buy, then you know this area over here where that gap is a solid support line. Now remember, in trading, nothing is a given, nothing is forever, nothing is just, oh, it's going to work out, because sometimes, yes, even with a solid support, price still does break down to the downside, especially when it comes to the market and to news and so forth, and global events like wars and oil shortages and electricity shortages and stock prices and companies falling. There's a lot of things that can affect a person's trading or affect a pair that you are trading. You have to remember, there's a lot of things that can affect your trading. So this is not a given that it is a solid support, but majority of the time this is a solid support. That's the reason why I saw price come down, bounced into the zone, and someone immediately went to the upside. So once I saw this green candle over here, switch over to the next one, I put a buy order in. This just the reason. This is a chance that I took to jump in earlier, but it paid off at the end because now I am in profit. I'm in profit there. So $22 already. If I move it up to there, what will that be? That will be $52. So but I'm not going to move it up there yet because that is not a because that is not a confirmed low yet. That is the recent low there because it broke that high. Once it breaks there, then I'll move it up. But I hope this gives you guys more or less an idea of how I trade and the style I use and what I do when I trade and how I trade. Remember my forex pairs, I trade on a 6-hour time frame. I am a swing trader. I'm not a scalper. I don't scalp and stuff like that. I am more of a swing trader. I like to put trades in and just let it hang there and let it just do it whatever it needs to do. All right, let me put my ugly face back on for you guys so you guys can see my ugly face. Where's the thing? There it is. All right, so then my ugly face is back. All right, so let's get to this gold quickly. Ugh. Okay, so my stop loss was at this recent swing low. I jumped in most earlier. I just want to show you. I jumped in earlier on this. Where's my? All right, so yes, I jumped in there. That was a nice win there for me. That was a nice win right over there for me. That's cool. I jumped in here on this trade and I got stomped out there. So it was a good profit. I think it was $140 or $140, I think, something like that, with this trade over there. So I got stomped out there at this level over here. Now I am back in the trade again in the gold. It did pick me up, did it not? Where's my gold trade? I did put a sell order in there. Alright, so it did pick me back up on the gold. There's a third style that I'm testing at the moment. That's why this one is at a bit lower volume. I'm at a lower volume here with this new style that or this trading method that I'm testing out. This is the 50% retracement on the Fibonacci tool. So once I see an abnormal movement like this, a big down, like big candles, an abnormal movement, from the bottom of that move to the very tippity, okay, I'm not at the very tippity top of that movement, I don't know why, to the very tippity top of that move. Let me just close this so I know it's fast. To the very tippity top of that move, I'll put a Fibonacci. I'll put my Fib. On my Fib, I've got a 100, 75, 50, 25, and a 0. So I've only got four lines, well, 5 lines on my Fibonacci. So what I do is, and look at that, it went to the 50. I've seen this a couple times, and I've tried it now once or twice, and it seems to be working, but it goes against, what I know as a trader. But anyways, what happens here is, once you see abnormal movement, that's also why I'm trading on the demo account, because I'm testing this trading strategy as well. You'll see my volume is lower because this is not the way this is something new to me. Once you see these abnormal movements like this big candles, big down, whatever, I usually, once I see price start building up and breaking through highs that's formed and goes to the upside, I'll put my Fib on there from the top to the bottom. And on the 50, I put this pre-order in, this morning already, earlier this morning, I put this pre-order in. Price was still here, still over here somewhere. Price was still over here somewhere. I put this pre-order in. Well, I didn't measure it nicely. The 50 was there, so I put it on the 50. Anyways, I put a sell order in, because according to this strategy that I'm working at now, once you see abnormal movement, you put your Fibonacci, and on the 50% retracement, you put your sell order, or if it's a move to the upside, you put a buy order. This is a move to the downside, so you put on the 50, you put your sell order in. Even if price is here already, you put your sell order, you put your pre-order in there as a sell, and you put your stop loss. If you want to be conservative, you put it between the 75 and the 100. Let me just get it between the 75 and the 100. Between the 100 and the 75, right over there. I personally will not put my stop loss there, but it is a good place, I think, to put a stop loss. But anyways, so that's how it works. And then your TP1, this is how it works: take profit 1 and take profit 2. So once it gets to 25, I'll sell off 1, because I've got the volume of 2, so I'll sell off a little bit at TP1. TP1 is at 25. Once price hits 25, you move your stop loss to break even, and you take your TP1. And this here down at the bottom will be TP2. Once TP2 is hit, you can continue on, and take your money and run, or you can take away your take profit there. I didn't put any take profits in because I'm going to do a trailing stop. But yeah, once it gets there, you can just do a trailing stop, like I said, or you can just put TP1, TP2. So at 25, TP1, at 22, at 0, you put TP2. That's also what you can do. And this is the why I'm trading on a demo account, and putting these trades in and testing this theory on top of the other 2 trading styles that I use when it comes to fair value gaps and when it comes to breakup structure. So I'm trying to incorporate all these things all in one, and to see how it works and see if I can work out something nice. But now, yeah, guys. Okay, so I did, the gold picked me up there again, $6 there in profit. Once it hits there, I'm going to take my stop loss, move it to break even. And if I see a break further down to the downside, I'll move it to the 25, and I'll just do a trading stop, especially if this swing low here is broken. I just want to have a little bit of a down there. So that is my recent swing low, because it broke that high over there. So this is my recent swing low. So as soon as I see price break through here, comes back for a retest and do a second round, then I'll just do a trailing stop, all below, like I normally do. Just this method is way to enter basically your trade, instead of waiting for this to happen, for price to break through, do like my normal trading style that I use, breakout structure, retest, second run, and then you put your trade in. This is just a way to do basically a shotgun head start, but it only works with abnormal candles. When you see like an abnormal movement, big candles, this only works with that. Well, so far the back testing I've done shows good results, but back testing is not as effective as testing it in real life, real market situations, and testing it. So I'm going to be testing this method for the next 2 or 3 months on this demo account, this Fibonacci with abnormal candles, and I'll see the end results at the end of 3 months or maybe 4 months. I don't know how long I'm going to use this. I don't use this on my real account. I don't use this 50% retracement, this method on my real account yet. I first want to see real market profits in real market conditions, and then only I will use this Fibonacci method on my real account as well. But on my real account I use the fair value gaps and the breakout structure. That's the only thing I do. Alright guys, I'm gonna really love and leave you guys for now. If you have any questions or anything you want me to have a look at, please put it down in the comment section. Oh yes, I wanted to show you also as well. It's the, what is this? The Euro USD. In the Euro USD as well. I just want to see where that is. Yes, Euro USD. Using my trading method, what happened was that is the previous high over there. I jumped in a bit earlier. I know, but I can, I can take chances like this because I've got such a very low volume, or I don't trade high volumes. I don't over leverage and so forth, so I can put wide stops on all my trades. Very, very nice wide stops. This one also, it broke through. I had to reverse out to the daily. I just want to show you guys quickly before I love and leave you guys. I just want to show you something quickly. Go down to the daily. Alright, so in the daily I saw that yesterday I made a video. I'm like, I can't understand why price is going higher on the Euro USD, because according to my trading style it was supposed to go down and it just kept on going higher. So I'm like, what the hell is going on? When something happens, when you're trading, you've got a mental state of what you think the markets are going to do, and if it basically goes in that direction, you're in the right, you're in the right frame of mind, and you're up to date with the trading, and you're trading the right way. But if something happens when it's unexpected, it's going the opposite way of what you thought it was going to go, then it's a good idea to reverse out, because you get too focused. You get too focused on what you're doing there on the 6 hour or the 3 hours or 4 hour time frame. You forget about the whole picture of what's happening. So once that happened, I'm immediately like, okay, wait, something is not right here. Something is definitely not like it should be. So why is it still going up? It should be going down. I said, okay, whoa, stop. Okay, whoa. Let me see. And you reverse out. You go to the daily time frame. And you have an overall look of what's happening. Just break your track, your one track mind, and just open up your eyes quickly for a second. Stop everything. Open your eyes and look with fresh eyes. And look at the whole picture in front of you. And once I did that, once I reversed out on the daily time frame, I'm like, Winston, it's quite obvious. There's a pattern. There's a wedge there. A wedge. It's as clear as daylight. There's a wedge, and price broke through the wedge. Okay, that is why price went up instead of down. Okay, now I know. So I went back into my 6 hour time frame. Now I know there was a wedge pattern that I didn't see because I was too focused on the 6 hour time frame. I didn't see that there's a wedge pattern. So now I saw price test there, price broke through, did a retest, and is finding some reports. So I did put an early kickstart or an early buy in on this year, just basically because it broke through. I know it could still just be a nice little fake out coming down, but it's fine. If it's a little fake out, it's fine. That's why the two-step, the breakout strategy that I use, that where you get your initial breakout candle and then you wait for the second run to break that recent high. That shows you that, okay, it is not a fake out, it is going to the upside. You know, that's just to protect you, or protect me from getting in or jumping into a fake out, because this might as well still be a fake out, just a little fake out and then going back down. My trading strategy that I use relies on, let me just get that there, relies on this breakout candle, because it broke the previous high there, this breakout candle to get broken with a second run. Once this breakout candle's high gets broken, that confirms to me that it's on the movement to the up. Then you put your buy order there already. You put your pre-order in. So if price comes there and comes back down, picks you up, and that's actually the way you should trade, to keep you out of fake outs. I jumped the gun there a little bit, but because I use small lots and small volumes, you know, I can jump the gun every now and then, just based on my years of trading. That's basically what I think. But it's only my thoughts. It's not a given. Anyways, that's my trading for now. I will definitely see you guys 2:30. 2:30 is it's a core retail sales month on month for the USD. So it's the unemployment claims again and the core retail sales. So let's see what happens. I will see you guys again at basically 2:10, 2:15. I'll be back online again and we can trade live. And remember, if you have anything you want me to have a look at, please feel free down in the comments down below, and I will do my best live to show you or to help you where I can. Yeah, from my side, Winston, good to see you. Mr. Mayor Forex Trading, have a good one. I will see you guys at 2:15 South African time, for those of you who don't know. Cheers.